to the scene, it's your host TTP. We're flying high in the crypto sky, it's you and me. From Bitcoin rush to Ethereum, we trading all the coins with the trading parody, making that joyful noise. We got bots, we got plots, charts on the big screen. 3 comments to Wick, Hunter with a trading machine. Laughing all the way to the bank, it's a fun parade. With every trade we made, watch how we get paid. TTP's got the formula, flipping coins like a spatula. In the crypto game, with the vernacular, spectacular. From the morning to the night, we're streaming with the light, trying to trading parallel. We'll teach you how to fight. Dive into the charts, the RSI, liquidity at a glance, trends on the rise. We never leave it up to chance. All trading Ganium, tools of the champion breed. With AI and math, we're planting the money seed. Laugh with us, trade with us, ain't no looking back. You're with the parrot now, leading the pack. Alpha profits, snap plus with the crypto law. TTP's on the mic and he's ready to soar. TTP's on the mic and he's ready to soar. TTP's got the formula, flipping coins like a spatula. In the crypto game with a vernacular, spectacular. From the morning to the night, we're streaming with the light. Join the trading parallel. We'll teach you how to fight. Dive into the charts.
Hello guys, welcome to the Trading Parrot. I hope you had a great weekend. Today we're gonna have a stream. I have a special guest, Keith from Material Indicators. It's been a while we don't do a live stream together. So at the moment I'm waiting for him to join. I've been texting him because it seems like maybe he's late with the previous stream and he's gonna join us just in a few minutes. So if you don't mind, while we get started, while we wait for Keith, I'm going to give you an overview of what's going on at the moment. I'm seeing loads of volatility in the market. Some people are already on crypto calling for very low prices. So I think it's good that we take a seat and we look at the charts and we see what we got at the moment going on. If you don't mind, hit the like and make as much noise as possible in the comments. Thanks so much if you can do that, because that really helps the stream. Instead of going just to 5 people, to go to many more people. So if you think the content is worth it, that's precisely what we need from you. So thanks so much for that. Let me share my screen. Very interesting, because we built a CME gap and it took nothing to take this CME gap. Let me show you. The past week, we had a CME gap between 59 all the way to 62.8. That CME gap took pretty much the full week to complete it. On Friday, we closed the gap, and that was the end. Then we left a gap on Friday. We closed it during the day. And then over this weekend, we created another gap, and that gap took just hours of Monday to close it. And once again, look at how precise people are taking profits right when they close the gap. At the top was 60.9, and the previous week was 63 around, and both are gone. So now the question is, once again, was the price just pumping here to almost 61K just to take the gap, take the liquidity from that, and then see a rejection coming down? Well, later today, we have something important coming on. We have the special chat that there's going to be apparently on Twitter. The Elon Musk and Trump are going to have an improvised chat. It promises to be entertaining, and I'm hoping to hear something about crypto as well. If they do talk about crypto, I'm expecting to see huge volatility. And this, what we're seeing today, seems volatile, but maybe it's going to be even worse than that. And I can see that Keith is just joining us. How are you, my friend?
Late. Sorry about that, man. Had the car in for some work and took longer than expected.
No worries.
And I think my schedule changed a couple times on my calendar. I had no idea what was going on. I just saw them all come in while I was on my way home. Anyways, I'm here now. Sorry for being late, but how you been? It's been a while.
Yeah, it's been a while. We were supposed to have a little bit of catch up before coming into the stream, but we're gonna have the catch up here with the rest of the people. So if you have questions for Keith, I know I have some questions for you, particularly when it comes to the order book. I have some questions prepared for you, but you told me that you're planning to do a little bit of traveling as well.
Yeah, my kid, my oldest, I'm taking to college on this week. So my youngest starts high school, and my oldest starts college all this week. So, pretty exciting time around here.
Well, it's gonna take some time for me to be able to say something like that. She just started with the nursery.
Cherish the moments, my friend, because
Yeah, I
there's
hear.
no turning. It goes fast, and there's no turning back.
Yeah, I hear that a lot. So I'm enjoying this precious moment. She's so lovely.
Yep, enjoy it. Enjoy it while it lasts.
Awesome, awesome. And should we have a little look at the order book? Do you want to start with that, or how should we take this today? Because there's the Trump with Musk conversation later on today. I also wanted to ask you what's coming up for the week. What's the most interesting event you think?
Well, first of all, yes, BC, big week, and I think you hit the nail on the head. Noise on the Trump Musk thing, like like I don't even, I don't even have um, words for what you know what that's going to be, right? And all of this enthusiasm over Trump about and his embracing of crypto. I think if first of all, you have to understand that this man is full of hot air, and he will say anything he can to get a vote and to get a Satoshi. And he's earned quite a few sats. He's had some serious donations, right, coming from the crypto community, and he's getting great support from the crypto community. But if you learned anything from watching him speak at Bitcoin 24, he has no idea what he's talking about. Literally, not a clue what this technology is, what this market is, or what this industry is. So take that with a grain of salt. Aside from that, as an American, I can say, and I've been in this industry since 2017, and I certainly want to see it supported here by our politicians, right? But there are way bigger issues on the table right now, and this is not the issue that I think most Americans are voting on specifically. Yes, it's rolled in there with other things, but there's pressing issues, so I'll leave it with that, so this doesn't turn into a political discussion.
Keith, do you subscribe to the idea that if Trump wins, there's going to be a bump, and if he doesn't, there's going to necessarily be a dump, as a consequence of
Whatever
the result?
happens, that's going to be a short-term thing, right? We get this noise all the time, right? And there are pumps and there are dumps every week over something. And I don't think that the implications of Trump not getting elected would mean the end of, there might be a pullback, there might be a correction there at some point, but I don't think it ends. I don't think it changes the macro trajectory of Bitcoin.
Yeah.
What do you think?
I mean,
And if it does, we're fucked.
I think that both parties are not the best informed people about crypto, and they've been both. They both have a history of being against it initially, but
Right.
that actually stands for most people. Even the biggest supporters nowadays, they have a period where they were against Bitcoin. So it's good to know that some of them get the laser eyes sooner than others.
Right. Well, Trump isn't warming up to crypto because he had this epiphany and learned how wonderful it was. He's warming up to crypto because he's made money off of it,
Convenience.
right?
Yeah,
I mean,
yeah, sure,
right. And so, and now he's trying to circumvent, again, I don't want this to turn into a long political thing, but, in terms of the Democrat side, they know that because this is such an important point for those that have, for the crypto community, that they have been, based on the response that Trump got initially, when he said he was gonna go for a reserve currency with it.
Mhm.
The, I think that the other side understands that they need to have some policy and embrace what's going on. Um, has she had the time to really be formally educated on it? And I see the Winklevi twins hammering her every day for not being at a roundtable discussion. Um, kind of busy. She's kind of
Yeah,
busy.
yeah.
And I'm sure that she has a team of advisors who are going to be advising her on this. She's not going to take the deep dive to do the research at the moment, would be my assumption. But obviously, she's going to do her best to make an informed decision when she's forced to do so. So, in terms of what we're seeing in the charts, wow, it has been an interesting couple of weeks, hasn't it? And I think that we've seen a lot of liquidity movement in the order book, and
Are
I'm
you sharing
happy.
your screen?
I am not even presented with the opportunity to show. Oh, here it is. Like, seems like something has changed here a bit. Let's go to.
It's completely new
Yeah,
UI
it looks
from.
like a new. Exactly. All right, so there we go. There's been a lot of liquidity movement here over this past week and through the weekend. Lots of well, a bit of spoofing, but really like ask liquidity coming down from above, pushing down, and then pulling. So you think they're going to open the door to the top, and then they rug pull the bottom, and you think it's going to go to the bottom, and then they come up and push it. It has been like a full weekend of whale games, and so I think it's really important when stuff like this is going on, and I'm speaking from experience because I've been been beat up a little bit here the past week or so because I have not been able to give trading the attention that it deserves, and so I scaled out of some positions that were not optimal and picked up some others, but I was worried that this shakeout was, kept seeing support get pulled and thought things would go lower. And so I kept sliding my trailing stop loss up. So I wasn't giving everything back that I was getting. I had some good entries, but I kept getting shaken out. Those closed in profit, but nominal profit, right? Just to prevent the loss, so that I could reinvest that capital when price retreated. And
Mhm.
so far, it hasn't gone as deep as I expected it to go. So I keep recycling the same trade over and over, but I'm recycling in the wrong direction a lot of times, it seems like. So with that in mind, I think it's important to stick to your plan, stick to your levels and your conviction, and place your bets accordingly. At the moment, you can see the heaviest concentrations of bid liquidity are at 50K and at 55. We still, of course, also have 45K, and 45K has been important to me for a long, long time, as we've identified this area a long time ago. Let me clean some of this up a little bit. I got a lot going on here. Look at this candle right here. That's a 1 hour candle. That's while I was sitting in
Wow.
the sitting at the shop getting my car worked on, and saw this coming, and I had a bid, and I was like, you know what? I had a bid, I think somewhere around here, and I was like, you know what? This 200, this is the 1 hour. This 200-hour moving average keeps coming into play.
Mhm.
Let me place it down there, and I did, and then I saw the wick go lower and lower and lower. And I was like, oh shit! So I closed that trade, and then ended up opening once I saw more buy volume coming in.
Yeah.
So I had a great entry, and then I turned it into a less great entry, but still, nonetheless, it's working out at the moment. So let me widen out here. We did get a long signal from trend precognition on the weekly time frame. Of course, these are tentative signals. It won't print until this candle closes. But basically, what this is saying is that price not likely to make a lower low here this week on the weekly. So that would be good news. That would be welcome news. Obviously, we still have huge resistance overhead, but I was talking about that 45K level. And what I like about that 45K level is it has confluence with this prior consolidation range. Remember, none of these consolidation ranges had been tested since we left them. The 25-30K range never got retested. The 40-45K range never got retested, and we finally got this retest of the 50K, right? So, and it went, of course, a little deeper than anybody wanted. I think that's kind of like, that seems to be the thing these days. Like the TA gets overshot a lot here, and the technicals get overshot a lot, but you could see the recovery here. We had lots of volume here yesterday. So what I like about this level, should we go there, is that it has confluence with this prior consolidation range and for the time being has confluence with the trend line. Now, with each passing day, this moves up. So this has been a target I've had my eye on for a long time. I do have some powder saved for that just in case, but we'll have to see. Have to see if that becomes a reality. At the moment, we've somehow made it back into this range here. This red box is a range of historical importance, kind of correlates with the prior. This is what a lot of people consider to be, a lot of technicians consider this to be the real 2021 top, and that this was kind of a manipulated distribution rally that got us to this all-time high. However you view it, this is definitely the important RS flip. And really the critical RS flip for me is the 69K level. You know, we've had so much time up at that level, so much interaction there since we first came in contact with it in early March. But it was just rejection after rejection. Every time we saw it, we had, a wick below, which I always viewed as a sign of weakness. We got very few candles that were in the clear without wicking below, and those came with down signals, right? And so, I mean, dozens and dozens of interactions with this level that just have not materialized. And a lot of, I've talked with a few people in our group, and some will point out that, hey, that's not where the strongest technical resistance is. We have this higher high. We need to combat here up in the 71.9 level, and that's absolutely critical for sure. But I maintain that. Excuse me, sorry about that. I maintain that we're not going to have a sustainable rally up to this higher high, and certainly not to this all-time high, until we start printing full candle bodies above this 2021 top. And that to me is what I have been focused on since we first interacted with that back in March. And we're now April, May, June, July, August, we're 5-6 months past this, and we still haven't crossed it. Now, that doesn't mean that this can't happen. That doesn't mean that we can't penetrate this. It just means that it is very strong resistance, and there's a reason why. And this isn't anything new. If we go back in history, we've seen, I'm going to clear out the trend precognition just to make it easier to see what's happening here. If we look back in history, remember, I forget when you say you started in crypto, but back in the in the era where we were trying to crack this really a 12K level, 13.8, I guess is where it is now. But we spent a lot of time, it seems like when Bitcoin interacts with prior highs, prior all-time highs, it takes a while to crack those levels. And if you go back to, this was the 2013 top, and it took a while in 2017 to get past this. And then, oh God, I wish I was in the market at this point.
No, I
But
wasn't either.
yeah, well, I'll tell you where I started. I started in October of 2017. Uh, my first, my first, my first $100 worth of Bitcoin that I bought was at $6,001, and yeah, the rest is hit. So this was my introduction to crypto. Oh my god! 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 This is the best thing
Yeah.
ever. Telling everybody they should do it, and then oh shit! Oh shit! Oh shit! Oh shit! Oh shit! Oh shit! Oh shit!
For a very long time.
Right.
Yeah.
So this was the school of hard knocks. This was painful,
Yeah.
but we have a history of taking a lot of time to break through these prior these prior all-time highs, and this was no different here. The 2019 top, the 2017 top, they took some time to get through those, and so it's reasonable to think that it's going to take time to get through this one as well, right? And so we're experiencing that now, and I think that it should happen, but it's not happening as fast as everybody would like. And these series of lower highs and lower lows and death crosses are, quite frankly, scary, right?
I have a couple of questions for you, Keith. The first one, let me show you my screen. Can you see my screen?
Mm-hmm.
So these are the months and the performance of Bitcoin, monthly returns. And I'm looking into August and September, and it looks quite bearish. If you compare the median, the average and the median, you're going to see lots of negatives in August, this whole column here. And then September, once again. And even if you see positive, it's not that high. Well, with the exception of August in 2017, that was towards the all-time high. So I guess that doesn't count. And I'm comparing it. If we compare 2024, we need to compare, I believe, with 2020. So 4 years back in time. And 4 years back in time, we had a green month followed by a September dip in red. And then October is what everybody calls Uptober. And it tends to be the best month. So what is your current plan? I ignore if you are currently holding a big bag of Bitcoin from before, if you sold it. You know myself, I sold at 73.5. I've been buying and selling, buying and selling. I've been swing trading this whole period of 6 months. At the moment, I have just a tiny bit of Bitcoin. And I'm thinking, well, my chances to buy are starting to shrink because I have August, I have September that could be negative, and if history repeats, I need to be ready for October and November. And what I see is that the whales are also doing the same. Let me see if I have the chart. The long-term holders just recently starting to shift from selling. They were selling towards the 73K. Then they went sideways these 6 months. And just a couple of weeks ago, they started reverting all the selling once again, whereas the short-term holders are doing the opposite, selling as the price goes down, I assume in a loss.
And what does that, right? So what does that tell you?
It tells me that I'm running out of time to have a big bag of Bitcoin and run it with them towards October, end of the year. And that these people as well, they tend to accumulate, and sometimes, I mean, not always they get it right.
No.
Sometimes they start accumulating. For example, here you can see they are buying 49 and they keep accumulating. The price then is at 39 and then it's at 28 and they keep the lower it goes, you see more pronounced their
Right.
activity.
So what this,
So I don't want to miss that either.
what this tells me is the smart money buys when price is going down and sells when price is going up. And, you know, the reason you do that is, well, there's a lot of reasons you do that, but one is because of slippage, right? When you're dealing with when you're dealing with large orders, if you have a large market order and price is going down, then you're going to have slippage and price is going to go down further on that order. But obviously, they're dollar cost averaging their way in and out, right?
Mhm.
Which is something I've been doing for a long time. I scale my way in and out of every single trade. And so, because it is so difficult to pick absolute bottoms and tops, and there's a TradFi saying that says time spent in the market is better than timing the
That's
market. And I'll tell you, these past few weeks, especially, I'm getting, that has been glaring me straight in the face. And so I do some manual scalps, but I also use the MTF mean reversion indicator to help me buy those spots where there's a high probability of a bounce. And that has really proven to be probably one of the easiest ways.
But can I ask you, is this for short-term swing trading, or are you talking as well how you approach the rest of the bull market? Let's say you have one plan for the week and to take profits, and another plan
Right.
that is towards 2025, 2026.
That's a great question. So this indicator was developed for 1 minute time frames. So great for scalping, great for swing trading. But over the years, we've worked with it and experimented with it. And there's, I found there's different ways to utilize this. So for those not familiar, this is mean reversion. And the basic principles of mean reversion are when price deviates from mean, it has a tendency to spring back. And that works in both directions, okay? Up and down. So as you can see, price deviated from mean, and it springs back.
Mhm.
Let's see how far. TradingView doesn't give us a great deal of history. Let's see how far back this goes and see if we can find some that went to the high side. So what we can do with this indicator is we can set it with different deviations. So this pink line right here, this is a 6% deviation. That's a pretty deep one. We haven't had a lot of 6% deviations out of Bitcoin this past year. But what I do is I basically build a grid of these, and depending on volatility, I might turn off the lower deviations. And I always keep the deeper deviations running because it never hurts, right? But when we're just in a sideways chop and I'm trying to, at least scalp something and get something going, I will focus on the lower deviations. So as you can see, these light blue ones, that's a 1% deviation, right? And I got a lot more signals at 1%. And they were profitable, right? 2.5%, 1.86%, 1.76%. And then these, obviously went bigger. And so on these low deviations, I use that for scalps and swing trading. On deeper deviations, I will use those towards my, often use those and hang on to them, put those in my accumulation stack. And so the way I
That's
manage
interesting.
my capital on this is I take, because there are far more low deviation signals than there are deep deviation signals, I'll small incremental orders on the low deviations and larger orders on the deeper deviations, right? And so I can use that any way I want. I can dollar cost average just one set of signals, or I can dollar cost average the whole lot, depending on what the situation is. So when price is struggling to recover, from these, then I could, if I want, dollar cost average the whole thing, and because my deeper deviations are larger, that helps pull my average entry price into a better better zone for me. So this has been really a useful tool because it is so hard to pick out those tops and bottoms. So this is one way that I do that.
And this comes together with material indicators. So I
Yeah,
presume,
this is our MTF mean reversion indicator. It comes bundled with trend precognition, which is the momentum indicator,
yeah.
and it
You need
comes
a trading view account, I presume, to
right,
get
right,
the
right. So
access
you
to
need
the,
trading view for these,
yeah.
but these also come bundled with, so you could get it as a standalone with trend precognition and MTF mean reversion, or bundled with other tools. And premium plan comes with fire charts, and then premium plus comes with everything. Fire charts 2.0, the MI dashboard, the whole everything we make. So it's definitely a valuable tool. It's the one that we actually kind of developed the company around when we first
Yeah.
started developing the company. We were giving away MTF, and we were just trading it in our community and just kind of testing it. And back in those days, there was so much volatility. Alts, it wasn't uncommon to see 20-30% moves on alts in a day. So those
Yeah.
days, those days seem to be long gone from here. But every once in a while that happens, but certainly not the norm.
Yeah, yeah, and I believe the link I have, the referral link that I have below in the video in YouTube, in the current stream, has a discount. But what I don't remember was, what was the discount? Was it 10% or a little bit more?
I have to go look and see what you have, but there's you definitely have a discount on your referral code. It's 10 or 15%.
10 or 15. Okay. Yeah, guys, have a look at the description in the YouTube stream. You can give it a try. And the second question I have for you, Keith, is to do with the order book. I'm going to show you, in this case, a different order book, because I believe this is not showing at the moment on fire charts, but maybe I'm looking at it in the wrong way. So there are 2 or 3 anomalies here that I want to highlight. And maybe you became aware by looking at different way to the fire chart. This one was at the top at 62.8, and there was this massive wall on Binance of selling right before the weekend. And the question is, this move in here is clearly not just one person. It's like an institution or something that really wanted to suppress the price before the end of the day. So you can see 9 of August, 23 hours, boom, they remove all the orders. And second anomaly, or not anomaly, but thing that is interesting to note, is we have this chunk of buying, of bidding here from 46 to 47, and it's quite substantial. We have 600, 800, 800, and again 800, so quite large. And all of this is happening at the same time. Is maybe it's a single actor, or people are expecting a new low maybe and go to 46, 47. Someone knows something, or they're just approaching the potential events that could provide volatility this week. At the top, I don't see much going on, but it seems like a very interesting snapshot this week compared to the previous week, that you can see is completely flat in terms of all these orders.
Right. So what was the date of the cluster suppressing price at the top?
That was from the beginning of, I think it was Friday, if I'm not wrong, 9th of August. Let me check the calendar. Yeah, that was Friday. So it
Yeah.
was full Friday, full of selling, ask liquidity right above the price, and that ended up causing this double top that pushed the
Right.
price into 57.5.
Right. So that's I like to call that liquidity herding, right? They're using their stack to herd price down lower. And there were some where it gets confusing is there's a stack of bids below, and then it gets rug pulled too, right? And so this is indicative of the kind of behavior that we've seen pretty heavy here over the past week, and it gets tricky to trade for sure, right? There's a lot of times where you can see it moving methodically, you can detect a pattern to the behavior, and you can trade it. This was a case where it flushed price way down, right? And hey, maybe those guys, maybe that entity has had huge shorts that they wanted to cover.
Yeah.
There's any number of reasons why somebody would do that. And yes, you could call it manipulation, but really, if you had the stack, if you had tens of millions of dollars,
Yeah.
would you be throwing your weight around the order book a little bit?
You need to be more cautious, I guess.
Yeah, I mean it's when it's that blatant, it's obviously not maybe the most ethical thing to do, and I really don't like seeing it, but it is unfortunately common practice in this space, right? And it's one of the reasons that a lot of traditional investors have avoided crypto is because of this kind of behavior. But it exists, right? Sometimes you can spot it and you can trade it. Other times you just have to let it play out, and I think that's another reason why you just have to stick to your game, stick to your plan. I posted something over the weekend. Weekend whale games are in full effect. Their only purpose is to try and take your money. So stick to your plan, and to me that means know your targets and know your invalidations, regardless of what these guys are doing, because they're just trying to shake you out. And you had I saw a snapshot you had of the fear and greed index a little while ago, and we're back to extreme fear. We got back to normal for a hot minute, and then fear is thriving once again. The old adage on that one too, right? Be greedy when people are fearful. Be fearful when people are greedy. And as I mentioned at the top of this, I've had a hard time timing entries because of this kind of behavior here. And you asked if I was, if I'm buying deeper, if I'm deployed. I am largely deployed in terms of my long-term position, but I'm using about 20% of it to trade and try and improve my cost basis on what I have. So I have invalidations too. If things go to a certain level, I will scale out of a larger portion. But I think that there is there's a lot of liquidations up at that 65K level, 65, 66 level, a lot of short liquidations, or leverage, I should say, at risk of getting liquidated. And I think that is going to eventually attract price into that range. So that's really kind of where my target is at the moment, but we'll see how things shake out. Oh, I see a couple of comments, by the way, asking at the beginning. I was talking about my kids. They asked if I'm teaching my kids to trade. I have shown my oldest a bit, and she's expressed some interest in it. Both kids have some Bitcoin. I did a deal with both of them. When they got their birthday money and their holiday money, I told them I would fund match whatever they gave me to put in. So we did that a couple of years ago. So they both have a few sats stacking, and I'm trading that for them alongside what I'm doing. So I really don't want to lose money, right? For my kids' sake, I don't want to lose money, or for mine. So yes, they are in crypto, and no, I wouldn't classify myself as a Harris guy. I am not a Harris guy. I am I am, but I am a rule of law guy. I am a father of daughters. I am a all for them having full rights over their bodies, and I'm not a Project 2025 guy. So that's where I sit on that, and we can leave it right there. How do we get the indicators? The indicators that I shared with you. There is a link, right? You have a link in the profile with the trading parrot referral link, and you could get a discount when you use that link, and you have the promo code in there as well, right?
Yep. It's in the description of the YouTube video. If you're watching the stream from YouTube, from my channel, you go to the description. There's always a discount there. What I don't remember if it's 10 or 20%. We need to double check that.
Yes, whatever it is, it's cheaper than retail. So you got that going for you, and yeah, we'd love to have you come over to the material indicator side and get access to some of those, to all of the tools. Hook yourself up with all of the tools. Why not, right? This, interestingly, you notice this block. I'm going to go back to fire charts here. We have a large block we had a decent block of ask liquidity up at 80K, right? We're a long way from getting to that 80K level, but I noticed in the last 24 hours, a block of this has left the 80K region and come down to sub 70K. So I found that interesting. Again, our biggest concentrations here at 50K and 55K. A little bit here at 45K. We looked at the areas on the chart where that lines up with technical analysis. But I just think we're in for a long haul, a long grind here before we get to this, right? We got to see more bid liquidity coming in with heavier concentrations than we have here to push up and challenge this. And it just hasn't materialized yet. There's two ways we could get through this, right? We either get enough bid liquidity, three ways. We get enough bid liquidity down here to outclass this up here and push up through it. That's one way. That's the preferred method. Or this continues to erode because they are dropping more ask liquidity down into the active range, which they've done since we were up there. I mean, look, at one point, this was almost 100 million at that near level, and at the moment it's 68 million. So
you mean that they are starting to close their positions? And
no. What they've been doing is they've been breaking off chunks and like throwing them down, like Mario Brothers, right? They're throwing blocks down. This is the big gorilla throwing blocks down into the active trading range. So hard to see here on the higher time frame, but yeah, basically we see some of it was pulled, some of it was moved down, and some of it was turned into market orders, some of it was moved down into the range. Same here. Look, you see it was building over the weekend here, and actually has started to erode a bit because they're dropping some down into the range here. So this could continue to erode. And of course, it could also roof pull. Like this is not, nothing is impenetrable, right? When the sentiment is there, we can burn through 100 million. We saw it happen back when we went to the 20K range, right? It can happen. But you need to see more bid liquidity in this range to make that even a possibility. But there isn't, this is not impenetrable in my mind. We could get back up to the 69K level and start pushing towards 70. That's certainly a reasonable assumption, but we've got to see more coming in above the right. So look how thin it is between where we are now and 55K. We need to see this moving back up. You see, this was up here at 56.5 over the weekend, and it pulled back, right? So it needs to step back up or have more come in above it to push this up. And that's what we watch for in the order book. And what's made it tricky is all of the movement, right? They stair step down, and then they they'll go up and then they'll pull a bid. I mean, they'll pull some asks, and you think that's going to open the door to go up, and then they drop something else, down lower. So this has been really challenging to navigate, which is why I'd let the algo, I'd let the MTF algo pick them for me.
Yeah, it makes it easier during this sideways as well. And I have a question for you. Can we have a look at the 6 month and 1 year and focus on what the brown and purple whales are doing? Because as far as I understand, the purple ones tend to be kind of like a leading indicator in terms of what they're
Yeah,
doing.
purple historically, purple has had the most influence over Bitcoin price action. Okay, and that's different for different assets. There's some shit coins where they can't, there's not enough liquidity to sustain orders that size. But with Bitcoin, purple, and you can see it even easier on lower time frames. Look at how infrequently brown trades versus purple. Okay, so they're both important. Brown is larger. They're placing larger orders, but the volume, because of the frequency, the volume of purple is much, 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 much higher. And
Yeah.
so, what do you say? The 6 month you wanted to look at?
Yeah, I wanted to see if there's any shift that we can spot in between lines there.
So what we can see here, this is the normalized view right here. And basically what this tells us, so this is each class relative to itself. So this is not that brown and purple are at the same level. This is brown has, since this period began, back in February, they basically hit their peak. 100% of what they have bought, their net buy and sell volume had peaked to the upside on July 27th, it looks like. And since then, they have sold about 29% of what they bought. If we convert that to absolute CVD, we can see the actual cash value. And now you understand why we have normalized, because this way you can barely see anything, right?
Yeah.
It looks very subtle. So let me expand this so we can see some contour on it. But when I hover over it, you can see that I took everything out. When I did that, the rest came off the page. So they've done less than 100 million in net buying volume in that 6 month, whereas purple whales have done
a little bit over
362 million, right? Over 3 times as much. And red has done even more. Red has done double what purple has done, and a lot of that was that early surge of ETF interest that we saw early on. I don't know if you recall, but this really was on pace with ETF buying heavy in those first few months. And you can see that they have since, they peaked back in March when, around the local top, the all-time high, and have since sold. Let's see, they peaked at the all-time high and have since come down 80%. So they sold 80% of what they bought, right? But they made good money. Good money in that process. But you can see that purple whales have continued to buy. There are periods where they're selling, and those periods, you can see the contour in the chart, and that's why I say that they have the most influence. You can see that the chart looks more similar to purple than the other classes. Here's an example. We were talking about price going down and whales buying, right? This was accumulation here.
Yeah. I wanted to show you something, Keith. I think there's a question about the open interest, and and I have an interest in the open interest because it's showing us that there is some ladder of values. Let me share the screen in here. And we have some guests.
Yes, we do.
Awesome. Let me show you this chart. This chart shows the open interest on the weekly time frame. And I noticed something, that every time that Bitcoin goes to a new range, well, some people might be super advanced in open interest and are going to find this too basic. But the first time that you learn about this, it's quite revealing, in my opinion. So if we look at these bands of ranging periods of the open interest, you can see that from June 2022, we were ranging between 5 and 10. I mean, roughly 5 and 10 billion. Okay. And if you focus on this range, you can pretty much find all bottoms if you identify the band of the open interest. Like you can say, okay, I buy here, I buy here, I buy here, I buy at the bottom of the open interest. And the way I interpret that is the market has picked a range of open interest. The people are using the open interest to get leverage, and the leverage every now and then resets, either because there's a pump that kicks out of the market all the shorts, or there's a dump and it kicks all the longs out of the equation. And eventually, when Bitcoin breaks 30K, it enters a new range. And that range, we could say it spans up until around here, which is also resistance during the bear market, the early bear market in here. When we went to 48K, there was still some open interest very high. And the range where we are now is as important as any other range we've been to also identify opportunities. So, for example, we went to the all-time high, and let me make this a bit smaller. So the all-time high is around here, and the open interest gets to 21 billion. And then it finds a bottom at 16, 15, more or less around there. And that becomes the bottom of the range of the open interest throughout 6 months. We've been doing the same thing that we were doing around here. Now we are doing it here. And we're in a very interesting point. We are back into 15, 16 in open interest. So my question is, what's going to happen next? Let's make this smaller. Do I get the tools to draw something? Let's see. Yes, I get tools. So this is the interesting point. And my question is this going to go back to the top, to 21? Is this, once it gets to 21, is it going to break out and do a price discovery with the price, as well with a discovery of a new potential channel for the open interest? Maybe one day we're going to start seeing the open interest fluctuating between 22 billion and 30 billion. Who knows? It depends on how impulsive is this move and how many new players can afford getting leverage, access to leverage.
Right.
But there's another outcome. Of course, we cannot be biased just towards, okay, this comes next. We need to think what happens to the price if we saw a flash in the open interest back into this range that is in here, that is equivalent to that and is equivalent to this. What if we came back to here? What will happen to the price at
And
that
what
point?
what was price at those ranges? And those prior ranges that you just circled, where were we
So
on price?
we got the 40, 48 kind of ranging price in
Right.
here, from 38 to 48. So it's a 10K range of price. So if you come here, if the price was to come here, let's say there's a Black Swan event or some geopolitical extra tensions later this month, who knows?
Right, right. Because Putin's saying today that that there's no more talks with Ukraine isn't tense enough.
I don't think that's enough, but maybe something additional to that.
And Zelensky incurred an incursions on Russian territory. That's not enough. Maybe it's going to take something, maybe it's going to take 300 rockets coming from Iran to Israel. Maybe that won't be enough. Maybe this election, maybe we'll just have civil war in the U.S. and that will do it. Who knows? I mean, it's like, yeah, it's scary to think about, but you can't rule anything
Well,
out with this.
well, you say that. I'm not supposed to say that in YouTube because I live in UK. I can get in trouble. So I just want to clarify that.
It's not anything I want to see, but it's
Oh, definitely not. Me neither. But let's go back into the technical. I think if we get into this area in here, I will
Mhm.
expect the price to follow. That I think necessarily is a consequence of flashing the longs that have opened from before. There's quite a lot of longs open from early in the market. I think I can see them with their liquidations with this tool. Let me see quickly. So we got liquidations at, well, if I look at the chart from too far, it's difficult to see the red, but we have the liquidations at the top. We have the liquidations at 46 to 47. And if we were to go lower, the largest is not even at the top. The largest is at 24K. And I'm not saying we're going to go there. Actually, I was talking about 48, 47. But if we were to come here, these chunks that at the moment it's not showing, but at the top you see numbers, right? You see 31K, 19K. Those are the 3x, 5x, 10x, 25x pools of people with leverage. And when I hover this red, you can see the numbers: 46K, 26K, 7K. So there's quite a lot there. And if we
right.
were to hit that, I will speculate, getting into that 47K somewhere there, that we could get back into this range. And if we get in this range once again, that is a full reset of the open interest. Because at the moment we went to the bottom of the range of the open interest that
Right.
still belongs to the past 6 months. We are nowhere near. We're at 16 billion. If we get there and we crash those liquidation levels, I speculate that we could get to 10 billion, and 10 billion could be a great reset of open interest for another leg up, because all that open interest still open is heavy. It's heavy for the price to continue going higher.
All right. Well, that would hit your. I know that you had a target at 48K for a long time, and that's a legit target. We have some confluence there, and and depending on how long it takes, if that scenario comes into play, and depending how long it takes to develop, where is the trend line? Looking back at the candle chart that I shared earlier, where's the trend line relative to where we are at that point in time? And
Yeah.
so this was, we have confluence here on that 48. I, again, would love to see this 45K level come into play, but that confluence is slowly eroding, right? It's working its way up over time. As for that 25 level, this is the consolidation zone that, in my mind, really validated what's happening. What we've seen here for the year. This was, of course, the FTX crash down here, and there was a lot of uncertainty at this point as to whether we were going to go lower. I know I certainly expected to go lower. It didn't happen. And, we started to see these moves breaking up, and it was like, we got to get these retests, right? And we got up, this was the first retest, came down to basically the 2017 top here. And then boom, right? We started getting these big moves. So this was, in my mind, this was really the bull flag that flagged the beginning of this current bull run, at least validating it, right? And we tested here, we lost these moving averages, and then boom, here's where we hit everything, right? We came through all those key moving averages in basically a couple of days, had a retest and off to the races. So this is a valid, this to me is probably the most important level of the year. As I from time to time, will go back and analyze history to see, not to beat myself up, but to say, what can I learn from what I missed? I was waiting for a retest down here at like 24,750 for the longest time. And it just never materialized. And so,
In that area that you're showing now,
mhm.
the price action was incredibly reminiscent of the FTX crash depression. It looks to me like a fractal, slightly more pronounced during FTX, but still, you see that there's
Well,
like
this was the FTX crash right here.
right after. The last one is FTX.
Right.
So that area there with the mini pump in the middle of the dumping,
Right.
it's kind of a fake out pump in the middle.
Right.
And then in the range that you were showing before, there's also that mini pump in the middle as well, right before we started going to 48. And I was looking at the price and I was saying, are we going to really do the same as we did in FTX once again, but later on? And then it ended up playing very similar.
So, another thing that has been talked about a lot this week has been these death crosses, right? We've had 2 death crosses this week, or last week, I should say. The first one between the green 21 week and the blue 100 week, and then the 21 day and the 100 day, and then the 50 day and the 200 day. And these, of course, are lagging indicators. It was like we had this first death cross, and how do we end up with a 12% candle after that? Well, that was based on what we've seen in the charts here. And you showed how the liquidity, how the asks got pulled and then the bids got pulled. We've seen a lot of that going on. So maybe there was a little choreography going on to this move. But these in themselves aren't really the end all. There's some history of this happening in the past where it isn't always bad, right? Sometimes price continues in that trend and extends, and sometimes it doesn't. And so if we look at history, just on those particular crosses, we've seen it. We've seen it before. Here's the 21 and the 100. Where's a better example? Here we go. Here's the 21 and the 100. Here's the 50 and the 200. But look what was happening here. So the one that really concerns me is one that we avoided a few weeks ago. And I mean, we avoided it by a day, and now it looks like it might be developing as well. And that is the 21 day and the 200 day. And I want to show you that this particular cross is not one that we really want to see a whole lot. Let me clear out the others just so it's easy to identify those. And it's funny, everything I've been highlighting on the screen share, not on my actual thing. So maybe it's been hard to see. So this is, look, we just narrowly avoided this right here. And this could have been a disaster because we were coming off of this breakdown. But let's look at some history of this particular death cross. Here's an instance where price that's a golden cross where the 21 is crossing up. We're looking for death crosses where it crosses down. So this one had a relatively quick recovery. This was August to October. Not terrible, right? Couple of months. And that would align with the October dates that you're just talking about getting ready for. Here is another example, right? We came off that 2021 top. This was, for me, the confirmation that the bear was in full control here, right? And boom, we saw a deeper breakdown, and the rest is history. That took years to recover from. Here's another example. This was back in 2021. We lost it. That was June. It took until August to recover. So it was a few months to recover from that, right? So for me, of all the death crosses, that's one that I really, really don't want to see. Here's another one. Back in 2018,
Yeah.
after the 2017 top, same set of circumstances. I didn't know enough about trading at this time to understand what this really meant, but this was the end. So what's going to happen at this point? You can see that this is coming into focus very, very rapidly. I mean, we're a couple days away. If we
Well,
don't,
I think that one is unavoidable, in my opinion.
yeah, I
This
mean,
is literally
we would
touching
have to
already.
see. I thought this was unavoidable. This was within a day of happening, and we might be there now, right? This might be unavoidable. The question is, will it be something that we recover from quickly, or are we looking at a prolonged, nasty grind to really establish a bottom? You know, I've seen some indicators that, despite this, that make this a local bottom. Well, local bottom versus rock bottom are two different things and remain to be seen. So, what we don't want to see at this point is a lower low. If we get it, then that puts your 48 in focus rather quickly. But I would think, just based on the liquidity that we're seeing, there's certainly not a lot at 48. So I would think that that's going to put most likely that 45 would come into focus. If we start going down this way, then we're going to see liquidity moving, quite quickly. I think once we get down this level, if we indeed do get down to those levels.
Let me show you one chart, Keith. This is my usual RSI chart. In this case, it's on the weekly.
Mm-hmm.
And well, this is the structure of the full bull market from FTX to the top. And we've been bouncing this level up until 17th of June. After that, we broke down. We came up for a retest. We touched this dotted yellow trend line. And right now, actually on Sunday, we close this candle that is very difficult to see, but in between these two lines, there's a candle with a very humble slope upwards. There's also a higher low. So that those are the kind of things saving the day. The things I didn't want to see, the most bearish things that we could have seen on this yesterday candle weekly close, would have been putting a new low on the momentum. That will be more bearish than where we are. And even worse, if we cross 40,
yeah, cross that 41 and you're headed to paradise.
Yeah, I mean, you cross 40 and you are in the bear market. There's no exceptions throughout the whole history of Bitcoin. That 40 is just too far away from the bull market in a weekly. In a daily, you can do whatever you want. On 4 hour, yeah, sure. But on the weekly, the monthly, you don't touch that 40 level. And we are too close to it, right? We are at 45. We have recovered from being at 40 in the past, like for example in here, but below 40, no. Let's go to the example of this bull market. You are at 42, 2 points to 40, but once you enter 40, you only have a dead cat bounce to exit, and after that there is a dump of 65%. That's bear market, obviously.
Yeah.
So I don't want to see those things. The good news is that this is still in a state that can get recovered from here, because we have higher lows and we are confronting a trend line that has caused a pullback twice in a row. We've been rejected by this trend line. So, and we are at a level of 50, which is actually we are precisely at 50. So we only need to get to 53, 54, and we get a breakout. and we already have a fake out. So that is something that probably caused a lot of damage to some people. I didn't take this long in here with this breakout. I say that it was too shallow for a breakout.
Right.
So I say I'm gonna pass on this one, and it came back lower. So if we come here every time there is a fake out, the next time there is less chances of having a fake out. You cannot have 10 fake outs in a row. After
Well,
the first
I took the long on the reversion
on the
at the
reversion.
bottom, down low, right there,
Okay.
because I was watching where you have your 41 mark. I think mine's at 42, 41, 42. And same thing I've been watching on the weekly that has been a magic number. I've been watching throughout every correction. So if price does move to that level, I know you have a way of calculating what price is relative to the RSI. What would price be if we got down to that level? At your
To which
41
level?
mark.
Back to the 41.
Yeah.
Or sorry, to the 41 in here.
Yeah.
I think I have it already. I have it at 45 because I didn't want to break below this low, 45. Let's see, 41. And let me show you something very spooky. This candle that you can see with a massive wick here,
Mm-hmm.
it made it to 49.
Mm-hmm.
Okay. That week, 41 RSI was 51. So from that level of RSI 41, we went almost 2K below. So during the week, I remember seeing the RSI being right here. And when I saw it here, I say, gosh, this is horrible. We cannot close the week there. And what I did at that moment is I bought. I bought there because I say, I don't think the bull market is ended. The RSI is below bear market territory. I'm just going to buy it because my conviction is that the bear market is not here. And it proved to be a really great entry because before buying at 49, I bought at 59. So I was already in a loss and I wanted to average down. And I tripled my position at that point. And I managed to get the average at 51. And then I wrote the thing up. But I already closed my position. I'm typically a very short-term swing trader. When I'm doing a swing trade, I get nervous when the profits are too high, just because I know how the market works.
Well, you made the smart move selling at 73.
Yeah, that was a big sale. And I close my eyes and I say, I'm gonna sell this for all the other times I never sold when I thought with my heart that I have to.
Right.
All right. I think this was a great stream and it's great to have you back, Keith. I'm hoping we can do this once again this month. August and September apparently it's going to bring some loads of volatility. So people are going to want to hear as well your opinion, the order book, all the information from material indicators. And guys, if you want to see a discount of 15%, I got confirmed that is the discount. Just have a look at the description in the YouTube video. One of the top links to material indicators gives you 15% discount.
Absolutely. We appreciate it. We appreciate the opportunity to come here and talk about what's going on in the market with you, man. I always enjoy doing this, and I will tell you that I think you hit the nail on the head. We're going to have some opportunities here over the next couple of months, but again, to and that just some of this that we're ignoring the signs. Just pay attention to the signs. You can tell but it's still having conviction that the bull's not over at this point. Now, if we lose that, we have our invalidations. We're looking at that weekly on the RSI, and you have to point. And it's better, regardless of how you trade. You may not agree with the targets that we pick. Whatever targets you have, it is far better to pick your targets and your invalidation, making that emotional decision when price is down, when you're underwater and price is beating you up. Make those decisions before you even buy. Know where you're getting out if things go against you.
Definitely. Thanks so much for coming to the show, Keith, and I'll see you in the next one. Thanks, guys, for tuning in. Thanks for all the likes. Bye-bye. Have a great day.
Thanks, guys.